It's time to say goodbye to your 401k. Hey, welcome in to the Investing in Real Estate show. I'm Clayton Morris. So glad to see you here. I am the founder of Morris Invest. We are a full service rental real estate company. And today we're going to talk about the 401k. And this channel, if you're new here, is designed to help you become a better real estate investor, more intelligent real estate investor. And there's a little something for everyone. If you're a beginner or more advanced, high level tax strategy you will find on our channel, as well as beginner steps on how to invest in real estate. One of the great ways to invest in real estate is to use a retirement account that you already have. Many people have access to a 401k, and right now it is under siege. Okay. Let me tell you something about the 401k. It was never meant to stand on its own as the way for you to build financial freedom, the way for you to retire with money pouring out of the rafters. The 401k was always meant to work in tandem with a pension. The founder, the creator of the 401k has said as much. It has fallen apart because pensions have fallen apart. 401ks have fallen apart. A 401k you could look at as like a little nice safety net, almost like Social Security. But the idea that so many Americans believe that if they put money into a 401k, this is going to be the saving grace when they reach retirement. It's predicated on a number of falsities. Let's talk about one of them right now, which is that we're going to retire less wealthy, right? So you're deferring your taxes until you retire. That's the promise of the 401k, right? But I don't have to pay taxes now. It's tax deferred. Great. I don't know about you, but I want to retire wealthier, which means I'll be in a higher tax bracket, which means, yes, I would pay more in taxes later because it's deferred. But people don't think about that. They only think about the here and now. So they think, great, I've signed up, started working for a new company. I'm young. I'm unintelligent when it comes to money. I don't know anything about personal finance, but I hear that the 401k is great. Yes, I will take out money from my paycheck and put it into this thing and set it and forget it, and I'll be fine. The problem is that most people don't realize how many fees they are paying into these types of accounts. You can go to feex.com. Okay, I'm not affiliated with this website at all. It's a great way for you to type in your information and to see what hidden fees are in your 401k or retirement account. Guess what? You're paying a lot of fees to people to manage your money, and they're not doing anything. So wouldn't you rather be able to have your money work for you rather than somebody else making money off of your money? Yes, I hope the answer is yes. So a 401k plan right now is under siege in a number of ways. Number one is that many companies are getting rid of the match program. Wells Fargo is now getting rid of their match program. So many companies that had you put money into your account and they would match a certain percentage depending on how long you'd worked at the company. So your vested amount for a number of years. So for instance, my old job, they would match up to 6%, but I had to be fully vested. I had needed to be an employee for 3 or 4 years or something like that. So you don't even actually get that full match until you've been there a number of years, which is understandable, right? They want you to be a long-term employee. I get it. But what most people don't realize about these matching programs is that typically it's not some stock that you get to pick from, like, oh, I want to invest in Apple, or I want to invest in this REIT over here. No, it's usually invested in the company you work for. They're giving you vesting and stocks in the company you work for. You have no choice very often in what's given to you in this matching program. Well, say goodbye to the match programs anyway. Yeah, I guess, COVID is a reason for these companies to claim that they're not profitable, and therefore they're going to cut these matching programs for their employees. Give me a break. Banks are awash in cash right now. They've been propped up by the Federal Reserve. They're making trillions of dollars while the American people are getting screwed, not getting a stimulus plan, not getting access to unemployment benefits any longer. And yet these banks and these big institutions and these massive companies are getting propped up by the federal government. But they can't provide a matching program for their employees anymore? Don't believe it. You see, Wall Street rewards companies that fire people, that lay people off. And this is the truth. Just look at MGM. During the pandemic, MGM laid off thousands of employees. Guess what happened on Wall Street? Their stock rose. You know why? Because now, hey, Wall Street sees that as great. You just cut 12,000 employees, we'll invest in you. Cut the fat. Employees are the fat. And unfortunately, those are always the first people to suffer. So this 401k was hanging on by a thread anyway. And now that this match program has been cut by so many companies, it's falling apart. So I am no fan of the 401k plan. So what do you do? Well, first of all, I would keep that money. I would not be investing in the stock market. I would not be putting my money into paper assets, which is the stock market, which, by the way, is about to have a major correction in the new year. So many of these stocks are wildly inflated, wildly overpriced. Let me give you a few examples right now of what you need to look out for as it relates to the stock market. If you've got your money tied up in a 401k, watch out. This data is going to blow you away. There's 3 different points that I want to make on why the stock market is set for a massive correction. And the Federal Reserve is not going to be able to bail them out. I'll show you why in a second. So first of all, why would the Federal Reserve not be able to bail Wall Street out again, like they did in 2008? Well, take a look at this. This is the amount of federal debt, that's total debt, as a percentage of our gross domestic product, meaning the amount of money that the government takes in through tax revenue, through your payroll taxes. See, here's 2008, 2009. The amount of public debt from the Federal Reserve exploded. But the problem is they never got it off their balance sheets. So they kept that public debt. They didn't pay it back. They didn't get rid of it. And instead, now in Q2 of 2020, in this pandemic, as we enter the end of 2020 into 2021, they have added trillions to their balance sheets. They have no more room. They have no more room to just go in and, take on a Bear Stearns or any of these other banks and institutions and prop them up. They don't have the money. And let's say they did have the money. What does that mean to the value of a dollar if they're printing it like crazy just to prop these people up? It's artificial. It's all fake money. So do you want to have your money tied to that type of investing? Paper assets? By the way, the investors who put their money into those companies and buy stocks are the first to lose. The bondholders, the people who are on the boards, those are the people that actually end up maybe getting some of their money back, but you won't. You can have stocks go down to $0 in value and you'd be screwed. That's what happened to so many people with their 401ks over the past few years. Here's another data point. This is the Buffett Indicator. And this is what we can expect from the stock market over the next few months. This is why Warren Buffett, this is what the indicator is based on, his famous indicator, based on the significance and the valuation of the stock market. And it's a historical ratio of total market cap over GDP. Look at that. It's significantly overvalued according to the current Buffett indicator. And that's why he's selling billions of stock and buying real estate and buying gold and silver. As of today, the total market index is about 184% of the last reported GDP. The U.S. stock market is positioned for an average annualized return of negative 3.3%. Sounds like a winner. Would you rather do that or be in real estate making an 8%, 9 or 10% return, net return on your investment? I know where I have my money. Here's another indicator that we should all look for, and this is corporate debt. So all of these stocks that you're investing in your 401k, most people don't even know what's inside of their 401k to begin with. This is the amount of corporate debt. These are businesses that have taken on so much debt. And the problem is that look how skyrocketed. Look how high it is right now in 2020. So all of these businesses have just been borrowing cheap money, taking on all of this 1 or 2% interest rate money, borrowing as much as they can, but are they reinvesting it in themselves? Ideally, you'd like to see them doing research and development, right? That's why we have tax incentives. Oh, great, company that I'm investing in, you're opening up a new lab to test all sorts of new products and medicines, etc. Great. No, they're not doing that. In fact, and are they hiring people? Are they hiring a lot of new people? No, they're not doing that either. So you have all of these federal incentives. You have the Federal Reserve pouring as much money as they can into these companies with the hope that they'll hire people and that they'll do research and development and further our economy. They're not doing any of that. Instead, they are buying their own shares back, therefore artificially inflating the value of their stock. You don't think that these stocks are going to crash in the next few months? Okay, go ahead, be my guest, and put as much money as you want in the stock market and see what happens. But your 401k is sitting there in this mess. And now without a matching program from these companies, we are in a world of hurt. The good news is that you can take your money out of your 401k. Okay, you can move your 401k into a self-directed IRA. you can start to position that to buy real estate inside of a self-directed IRA. And because of the CARES Act, you are able to take that money out up to $100,000. And we know that that will probably be extended through the rest of 2021 under a President Biden. So there are some fantastic opportunities for you to leverage a 401k and move that into a self-directed IRA. My team at Morris Invest can help you get set up with a self-directed IRA totally for free. We can do it in about 10 minutes. It will blow your mind how awesome it is. So we'll have a link below for you to book a call with us totally free, and we'll help you with that transition. But either way, I want you to go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.